Welcome back. It's time now to take a look at the top business stories. Construction companies' stocks see major gains at local bourses. US Fed considers further stimulus plans. And we find out how Middle Eastern businesses can work best with management consultancy companies. The Asian markets ended higher today, while the GCC markets also gained. There were similar results across the UAE bourses, as the real estate sector shows optimism off the back of Qatar's winning bid to host the 2022 FIFA World Cup. The DFM gained over 1% to close above the 1700 mark. Arab Tech jumped 9.25%, while Drake and Scull was up 6.5%. MR Properties climbed nearly 2%. The DFM's own shares were up 3.25%, while telecom operator Do gained 0.5%. Emirates NBD fell 0.5%. 233 million shares were traded, valued at 373 million dirhams. In the capital, the ADX gained nearly 0.25% to close at 2,749 points. Abu Dhabi Commercial Bank climbed 0.5%. Aldar Properties was up nearly 2%. Suru Real Estate gained 1.25%. Taka fell 3.5%, while Etisalat was down 0.5%. 79 million shares were traded, valued at 148 million dirhams. Meanwhile, Moody's has said that Qatar's winning bid to host the 2022 World Cup is credit positive for Qatari banks. With the government expected to spend $57 billion over the next decade for infrastructure development projects, the ratings agency has assessed that this will create long-term business growth opportunities. And all Qatari banks will benefit from strong economic activity and higher credit demand in the next 12 years. The US Federal Reserve may consider buying more than the $600 billion in government bonds it originally announced in November. In an interview in CBS program 60 Minutes, Chairman Ben Bernanke said that the Fed's actions are aimed at supporting a weak economic recovery. This follows latest US data that has revealed that only 39,000 jobs were created in November, while the unemployment rate rose to 9.8% last month. Bernanke added that at the current rate, it could be up to 5 years before US unemployment rate returned to normal of about 5 to 6%. Well, for a look at how the markets have reacted to this, we're now joined by Anil Sachdev, futures dealer at ACM Middle East DMCC. Welcome to the show, Anil.
It's a pleasure to be here.
Now, the Eurozone held a meeting with finance ministers today to discuss the possible expansion of the bailout funds from the 750 billion euros, whilst the US Fed chief has talked about the possible expansion of current quantitative easy plan. How will this affect the currency market in the week ahead?
Well, we saw dollar weakening after Friday's disappointing job numbers, pushing currencies to new highs. Now, Belgium is pushing for expansion of the current cash pool of 750 billion euros. But we are seeing some opposition from France and Germany, but ECB President Trichet and IMF are backing it, as after Greece and Ireland, Portugal could be next in line for seeking bailouts, and there could be no money left for Spain. Also, this is a large part of a large fund of permanent crisis mechanism in 2013. And and finance ministers from the Eurozone are meeting today evening in Brussels to discuss on the expansion policy. And any trend for the euro could be set after this meeting. Euro tested 1.3438 levels on Friday, but today declined after disagreements over the bailout plan. The Australian dollar moved down to 98.64 after RBI speculated to keep interest rates unchanged at 4.75, backed by weak GDP numbers and risk of higher inflation, while the dollar yen is stable right now after moving to 83.40 levels on Friday. But we also are waiting for any outcome after Banaki's comments could lead to more outcome on any further increase in bailout plans.
So what can we expect in the commodity market? I mean, gold is on the verge of breaking the current record high, while oil is posed to break the $90 mark.
Gold broke 1400 levels on Friday after the jobs number and is expected to break the 1424 level highs. We can expect the gold to continue its surge upwards after investors are flocking to the metal as a form of alternative investment against the weak euro and the dollar, and after Bernanke's comments acted as a catalyst. Crude oil surged 6.5% last week, backed by strong manufacturing numbers in the US and China, and the strong demand for emerging markets could test 90 levels again. Crude oil could see resistance at 90.65 levels after breaking 90 levels, and any efforts of not stabilizing above 90 levels could see pullback to 88.65 levels.
Thanks for your time, Anil.
Thank you.
On the way after the break, we talked to Jerry Cryer, the executive director of The Next Era, about the role of management consultancy companies in the Middle East.